This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC said on Tuesday Chinese oil demand would rebound this year due to relaxation of the country's COVID-19 curbs and drive global growth, and sounded an optimistic note on the prospects for the world economy in 2023. World demand in 2023 will rise by 2.22 million barrels per day, BPD, or 2.2%, the OPEC said in a monthly report, unchanged from last month's forecast, which had ended a series of downgrades. A stronger economy, if it materializes, could lead to upward demand revisions and support oil prices, which have rallied in 2023 on Chinese demand hopes. OPEC sounded an upbeat tone on the world economy's prospects, even though it still expects a relative slowdown from 2022.
Oil prices rose on Wednesday, extending the previous session's gains, driven by optimism that the lifting of China's strict COVID-19 curbs will lead to a recovery in fuel demand in the world's top oil importer. Brent crude futures firmed 63 cents, or 0.73%, to $86.55 a barrel by 0401 GMT, following a 1.7% rally in the previous session. U.S. West Texas Intermediate, WTI, crude futures rose 68 cents, or 0.85%, to $80.56, having risen 0.4% on Tuesday.
Moving on to the top news in the energy sector.
Oil output from top shale regions in the United States is due to rise by about 77,300 barrels per day, BPD, to a record 9.38 million barrels of oil per day in February, the U.S. Energy Information Administration, EIA, said in its productivity report on Tuesday. The oil increase was the lowest in more than a year, with volumes shrinking on weaker productivity per well and on inflation cutting into oil companies' production budgets. U.S. crude oil output in the Permian in Texas and New Mexico, the biggest U.S. shale oil basin, is set to rise by about 30,400 barrels of oil per day to 5.64 million barrels of oil per day in February, its highest on record, the EIA projected.
German spending on its gas and electricity price caps could be lower than expected due to falling energy prices on futures markets, which will also reduce revenues from a windfall profit levy on energy firms, the finance ministry said. Asked whether lower energy prices had pushed the government to change the spending forecast of its allocated energy aid package, a ministry spokesperson said, the actual financial needs depend heavily on the further development of gas and electricity prices for end consumers. Germany last year set out a €200 billion, $216 billion, relief package to shield households and industry in Europe's biggest economy from surging energy prices, including gas and electricity price breaks. Next, we have the top news in metal markets. London Metal Exchange zinc inventories have tumbled to the lowest levels in more than 3 decades, but rising stocks and tepid demand in top metals consumer China are helping to dampen concern about potential shortages. Shutdowns of some European zinc smelters this year due to high power prices has been a key reason behind low LME stocks of the metal mostly used for galvanizing steel. 3-month LME zinc rallied along with other base metals in recent weeks as speculators cheered the reopening of China from COVID-19 restrictions, touching the highest in over 4 months on Monday.
China's state planner on Wednesday issued its third warning this month against excessive speculation in iron ore, adding it will increase supervision of the country's spot and futures markets. Iron ore futures in the world's top user of the raw material rallied 5.6% in the first 2 weeks of the year to a 17-month high of $896.50 Fen, $132.26, a ton on January 13, as investors bet on surging demand for the steel ingredient as China's economy reopens. Companies should not engage in price gouging and speculation, said the National Development and Reform Commission, NDRC, in a post on its official WeChat account.
We will now look at the top news in the agricultural.
Malaysian palm oil futures rebounded on Wednesday, tracking strength in crude and rival edible oils, although talks of key buyer India weighing higher import duties limited the advance. The benchmark palm oil contract for April delivery on the Bursa Malaysia Derivatives Exchange gained 58 ringgit, or 1.53%, to 3,853 ringgit, $889.43, a ton by the midday break. It had closed 1.5% lower in the previous session. The contract followed a rebound in overnight soy oil price while higher crude oil prices attracted some bargain hunters, a Kuala Lumpur-based trader said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.